May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the Euro USD, the Euro USD. Now, you can see down at the bottom here where we usually see our news items, for the what do you call it, the economic calendar. You don't see any here, so don't expect a whole bunch of things for the euro itself. But for the U.S. dollar, there is some news. We got tentative dates for Thursday and Friday for CPI data and core PPI. All right. This consumer price index is very important, but we might not get the numbers for either one because in the US, because there is a US government shutdown going on. So we're not getting the numbers produced. All right. Earlier in the week, Monday, Tuesday, no red folders on Monday, and we have bank holidays on Tuesday. Okay. Uh, to include the all important US dollar. So in those 2 days, you're going to see the markets trade in a narrow range, and you'll probably see some herky jerky type movements. You got to be extra careful if you choose to trade in that environment. Okay, now let's look at the euro. All right, now I just completed a US dollar index analysis just before this video, and if I can see it here, there it is. And what I want to point out to you with the US dollar index is I don't know what I was trying to do there. All right. The US dollar index is the inverse of the Euro USD. All right. If you see on the monthly, you can see that I am bullish in the US dollar. All right. Because we have this higher high, higher high, and a potential higher low here. And I'm looking for some more upward price action at this, what do you call a diagonal line of support there. All right. Just the opposite is what I'm looking for in the Euro USD. All right. As we make this low, lower high, lower low, and we have a potential lower high getting ready to be made here. This is the the descending channel for the euro, and I'm looking for this potential lower high here to give us the next lower low, at least make a run towards that low. All right. uh but this is on the monthly. If we go to the weekly, sorry, let's see. If we go to the weekly, you can see it's taking its time, man. It's been rangy, it's been consolidative, but we did see a touch of that high, that diagonal resistance line, the trend line there. I'm not a trend line trader, folks. I just use the trend lines to mark structure. All right. And you can see for weeks we've been making a push towards these lows, and we've taken out a lot of sell side liquidity. All right. We still have this low to come at. All right. Just the opposite, with the US dollar index. That that low, that high was taken out last week. All right, with last week's candle with the US with the Euro USD, it has not hit that low yet. So we have a divergence there. All right. Do I think that eventually we'll catch up to it? Yet to the US dollar? Yes, I do believe this should be our next uh, objective, the sell side liquidity below that low. Okay. Now, if we go down to the weekly, I mean to the daily, what I want to first, before we go there, what I want you to see is last week we did take out this the low of the previous week, right? But price came down below that low and then went back up, trading within the range of the previous weekly candle. All right. uh, that's not bearish at all. All right, that is a bullish uh, sign. So what I'm looking for is price to trade towards that low. I mean that high here, last week's high, possibly open open high and then close low. You understand? I'm looking for a an open high, low close candle for next week. All right. Now, if we go to the daily, let's take a closer look at this so we can mark down what I'm actually looking for. If I can just press the right buttons to clear this. All right. Now, on the daily, what we can see is the market has broken structure here. I like that we have broken structure because when you have a bearish break of structure, you know the intent of price. Price is heading lower, period. All right. That's a bearish break of structure. There's no misinterpreting that. And we traded below it. So what do I normally say? I say we look at that last leg and we wait for the pullback. And that's what I gave you last week. Wait for the pullback and then we could sell it. Well, we got that pullback. And where are we? Price is tapping this buy up before the strongest sell off. This is an area of supply, folks. This is also an order block. All right. This is an area of fair value, and price is coming back to mitigate that area of fair value, to offer that internal range liquidity. And then we could head towards this external range liquidity here and here. Got it? That is the way it works. Lower low, lower high, lower low, lower high, lower low, lower high. That's it. All right. You're looking at this and you're saying, why don't you count this as a lower low, lower high? Because it's only a lower low if it breaks the last low. This isn't a lower low. This isn't and only a lower low can create a lower high. You understand? Or a higher high. All right, but this here, I might have just said that wrong. The this high, I'm getting it all mixed up. This high is only a lower high when it creates a lower low. Got it? This is not a lower low. This is a lower low. The high here created it, and that's great. All right, but you don't trace it back. You don't look any further than the fact that if there is a buy up and price overcame that buy up with a strong sell off. This becomes an area of supply, and it is an order block, and price is coming back up to mitigate that order block. I'm looking for price to find uh, resistance here. Find the resistance for the sell off. So sell the rally. Sell the rally. That's what I just said. Now, should price take out that high? Should price take out the high and this order block fails? All right, if this supply zone gets violated here, this becomes a V-shaped kind of recovery. I'm not looking for shorts in that. No way. No way. Once the once the protected high is taken out, this one, this is actually a protected high here. All right, but we have a strong sell, a strong buy up before a sell. Once price takes out this high, this becomes a target. This becomes vulnerable. You understand? And this is the last impulsive leg. I'm looking for this to be just a correction, and I'm looking for it to turn over. That's all. All that goobly glop I just gave you, I hope you allowed me to straighten it out and you're clear. If you have any questions about it, just make sure you leave me a comment in the comment section. Now, I want you to see something here. Where are we at? We are at a bearish fair value gap here on the 4 hour. I'm going to mark it, and I need that 4 hour. Oh, I chose the wrong one. I need that 4 hour fair value gap to hold. I need it to hold price. All right. Now, price is in a bullish for fair value gap right now. That is a bullish fair value gap. Don't get confused by it now. All right. These are the things you're going to watch. If the fair value gap fails, if this fair value gap fails and price goes into it, and we start to see price heading down towards the low of that fair value gap, hey man, this is your signal. You look for this. Sorry, don't get confused by the lines. Once it breaks this, we take out that low. I'm looking for price to pull back into this bearish leg for a internal internal range liquidity, and we can take a high probability trade to the downside. Got it? If it fails here, if that 4 hour fair value gap fails here, then these highs become targets. You understand? So I will hold off on shorts if this fair value gap fails inside here. So those are the things that I look for. I'm hoping that you see the sense in that. Make sure you hit the like button. Make sure you hit the boost button, will you please? And help my channel to grow. And if I give you some googly glop. All right, I want to make sure that you're straight on what I said after that. All right, that I clarified it for you. Leave a comment or a question. I would love to answer it. I answer and respond to all my questions and comments in my comment section. Okay, I'll see you in the next video. Thank you for watching. May profits be upon you.